how you can get rich and stay rich pre and post pandemic. We all witnessed how the pandemic turned our lives upside down. For a moment, it felt like the world had stopped, affected economic stability, and dreams were crushed. Now, the question is, how do we fight this pandemic in terms of protecting our finances and even climbing up more to success and wealth? Luckily for you, Fortune Fastlaner, we have the answers to these questions. Through this video, you'll be able to know how you can get rich and stay rich before and after pandemic. Let's go now to this video. In 2018, the economy was suffering from the coronavirus recession and 22 million Americans filed for unemployment. Even though America's billionaires added 292 billion to their wealth during this time period, it's unclear if their investment would serve a worthwhile purpose. This report creates two very different reactions, and many people may see this report and feel anger that wealthy people keep getting wealthier while the majority are experiencing a financial crisis. Many others might be looking at this report with curiosity and wonder what the wealthy do in order to prosper in good times and bad. First, wealth increase post-crisis can be earned through stock price growth, requiring knowledge of these trends. First, we must understand that the $292 billion made during this crisis was not just cash that billionaires can put in their bank account. This wealth increase was due to the sharp growth in stock prices after the recent crash. And since most of these billionaires have large equities in these companies, their wealth grows as their company stocks grows in value. Many people have found wealth by creating companies or helping contribute to society in other ways. For example, Bill Gates from Microsoft and Warren Buffett from Berkshire Hathaway. You can also build your own fortune with a few actions like an amazing company, keeping many large assets, and starting your own real estate investment firm. One of the most common traits that a wealthy person has is to be the owner of a company. Whether they start it or just invest in another person's company, owning a property and shopping brands like this help increase their wealth exponentially. In the event of a resurging pandemic, how to get rich quickly is elusive. Tony Robbins sifts through 50 of the richest investors for various methods, but shares his personal ideas in this book, which are to create passive income, stay consistent with your plan, face moral dilemmas head-on, be aware of who you need to protect yourself from, and use personal accountability. There's always a way around hard decisions, so don't let this ever-changing landscape discourage you. To stay rich or get richer, take on your own discretion in preparing for a post-pandemic. Here are three main categories of financial success that are important to keep in mind. First, consider financial security. Imagine never having to go back to work again and relying on yourself for dinner every night. To stay rich and secure, you need reserves. This can be calculated with formulas that we're going to cover in the bottom of this video. For the purposes of this video, let's assume that your basic living expenses cost you about $30,000 per year. The goal to achieve financial security is to create an investment fund that can generate this amount of money every year after taxes. Once we do that, we will be financially secured. To increase your chances of achieving financial security, create an investment fund by using a savings account to roll over any extra money. Soon after inflation, these deposits will produce a consistent income. The next is financial freedom. Imagine waking up every day knowing that your current lifestyle was already paid for by not just expenses. This includes any vacations or trips taken, but also fun experiences that you usually enjoy, such as in the previous example where this costs around $45,000 per year. And lastly, financial freedom. Vacations, sporting events, and out-of-the-ordinary experiences can be cost prohibitive if you can't afford to make these part of your lifestyle. Total financial freedom could allow you the opportunity to take vacation without making a dent in your finances. A number in mind is $75,000 per year for travel and events. Now, let's move on to how to achieve these financial goals through tax planning and investment income. Here's where we enter the accumulation phase. Imagine your financial journey as climbing a big snow mountain. You will have to work and put in the effort into climbing this mountain. But once you reach the top, all your hard work is done for you. And now, you can start playing on your slides down the hill of wealth. The only thing left to do is figure out how higher up than the top of the mountain is. This is our accumulation goal in order to achieve financial success later. For example, how much money would we require in order to achieve financial freedom? This is where Tony uses his well-known financial freedom formula known as the equation of economic prosperity. But before you assess the amount of cash it takes to lead a happy and worry-free life, assume what the average person needs for their entire life in order to be financially secure. Every single penny counts when it comes to your financial security. Knowing that might have been hard for you, but don't give up. Remember that, in many ways, all the money you might be holding will be gone before you even realize it. The best way to save through a post-pandemic will be with stacking your savings over a long term. If Tony's right, we'll need to multiply our monthly expenses by 12 in order to have approximately the same amount of wealth during some time after the pandemic as we did before it hit. To get your yearly cost and accumulation target, multiply the annual cost by 20. For example, let's say your annual living expense is $30,000. Multiply this number by 20 to obtain a goal of $600,000. For financial freedom, let's say your cost and accumulation goal is $900,000. A third target for financial freedom, for total financial freedom, we multiply $75,000 by 20, and we got our target of $1.5 million. Now, Mr. Betterman asked, why do our annual expenses require us to save 20 years? Mr. Betterman explains the rationale. Now with time savings and financial assets, you can reach your goal faster and have your money last longer than 20 years. In the accumulation phase, we use our money, then more of the money. Our goal is to get a certain point where we can use all of the returns of our investment to live a life as desired. If we take this concept and compare it to the blog title's pre-post-pandemic concept, then we would need $900,000 invested in order to have a compounded annual return of $63,000. After paying taxes, you will have roughly $45,000 that will pay for your lifestyle. Notice that this strategy only uses the returns our money produces and not the principal. This is why we say this will last virtually the rest of your life. You will not need to spend anything but interest as long as money is being generated in order to maintain your lifestyle. We want our principal intact so we can continue producing income virtually forever. Now, do you wonder if big investing decisions are worth the risk? The answer is yes. There are risks involved and high-risk investments. There are market crashes and recessions, just as there are bull markets and elevated economic growth. These volatile equities could be managed with asset allocation for a timesheet of success regardless of economic cycles. Luckily, Ray Dalio has a few helpful tips on how to invest your money where it's most likely going to grow fast. In any scenario, he recommends a diverse portfolio that prizes stability over volatility and includes trust as well as open-ended investments. Now, with the economic climate constantly fluctuating, you're likely to use different methods to predict changes. Using the 4 different economic climates, you can determine what method is most effective for your predicted change. This can be represented by using this chart. There are times of economic growth when inflation happens. There are also times of economic decline when deflation happens. In order to create a virtually risk-free portfolio that can rebound during the biggest economic crisis, we must understand what assets do well in each economic state. New assets like cryptocurrencies have spikes in demand when traditional flat currencies experience hyperinflation. Furthermore, asset returns are much higher than traditional investments, such as stocks and bonds. When the economy declines, safety or guaranteed risk offers a degree of protection. Risk represents opportunity and can also be risky. Instead of risking physical capital, as in Wharton stock markets, you can use bonds to provide liquidity during challenging times. In other words, cash does well. In order to effectively allocate your money, Dalio recommends putting 25% of your total weight from one risk category into another type of investment. That being said, some investments have protected themselves from the shift in the economy. In order to protect a wealthy portfolio, you should invest in riskier assets and change your allocations periodically. Since a pre-pandemic is not an immediate concern and it is unlikely that any investor will be able to predict the future path of pandemic activity, cash remains one of the safest investment options. Allocating between debt and different kinds of investments also helps ensure return stability. Most of us think that each person should have 25% of the money in each of these 5 categories for proper diversification and long-term planning. But like Ray Dalio says, we create less risk when there is more equity. For example, say we have a portfolio split 30% stocks and 70% other asset classes. Even if 90% of your total investment was placed in the stock quadrant, with 10% of your money each going to other asset classes, it would still create less risk. The all-weather portfolio by Tony is the perfect strategy to protect your money, giving an overall return of 9.1% per year. In uncertain economic times, there simply is no better return than this on your hard-earned investment, and as Dahlia gave this exact strategy to Tony in a whisper so as not to ruin all his plan, he started looking for ups and downs. In what they see as a probable pre-pandemic scenario, he has another 7.5% in gold and another 7.5% in commodities to help combat inflation, but still keeping their percentage low for their historical volatility. By incorporating all of these asset classes into your investment portfolio, we are creating an environment where our money can grow while protecting ourselves from losses and any economic climate without trying to predict where the market or the economy is headed. Getting rich is hard, and staying rich is even harder. Understanding what to invest in and having some luck mixed in makes it a little easier though. In general, the all-weather portfolio has proven an effective strategy both through tried and true tactics and backtesting that showed it nearly always houses profits. Discovering how to profit from a pandemic gets more difficult with every passing day. A professional investment strategy can significantly mitigate the risk of losing all your money. After doing some analysis, people who execute the all-weather strategy, a tactical approach to investing in four stocks over different market conditions, saw an average profit of 111%. As explained by All Weather, this strategy works to benefit 85% of the time and has an average portfolio return of 10%. Backtesting from 1980 revealed that this strategy lost little over 2% and generated a monthly return of over 10%. Now, of course, it's important to consult with a financial planner before investing. This video is for educational purposes only. This video has very much in mind the ever-popular book by Tony Robbins on how to master your game in money, called Money Master the Game, which I highly recommend. I know that many are newly trying to invest or just thinking about investing, and it can feel a little scary if you don't have the knowledge needed. Instead of trying to achieve truly incomprehensible and unrealistic goals like Tony Robbins, you should be more realistic and holistic in how you handle your money. With a dedicated financial planner, you can make all the right decisions that lead to wealth, instead of worrying about all the wrong decisions that do quite a bit of harm towards your financial future. There are two main courses I would recommend with your free trial to learn more about investing. The first one to learn about is the stock market, which builds up your wealth with smart investments that can save you from any financial disaster. You'll learn in simple terms how to get the most out of stocks and become the human CEO of your portfolio. To start maximizing your potential for long-term growth and preparing for financial disaster, the stock market is an important topic to learn more about. Stocks intuitively diversify risk, so you will find yourself in a much stronger position to weather any economic upheaval. The second course I recommend is financial literacy. Financial literacy is a key component to staying rich in case of various types of pandemics, and it's best if you address this by taking courses from experts who teach courses on personal finance, like world-renowned finance professor Raymond De Janeiro has designed for the financial education course at the Great Courses Plus. Another course that I recommend is learning how to take fantastic travel photos with Bob Chris from National Geographic. In order to make your money last, it's important to take care of yourself mentally as well as physically. Just taking a class on financial literacy taught by Joe Wiesenthal of CBS Money Watch isn't enough. Take one from award-winning finance professors such as Raymond De Janeiro and Bob Chris. Finally, learning about photography is the third thing I recommend because even if you're not an aspiring photographer yourself, you'll be better prepared for your own vacations. Business Insider has mapped out a strategy to stay rich post-economic pandemic, in which billionaires can get ahead of the curve. You can make use of food shortages, oil price increases, and even more wealthy inequality. While economists say, as a best-case scenario, only one-third of the wealthiest people may be able to survive on this plan, advanced planning could ensure your survival. That's it for today's video, Fortune Fastlaner. Remember to subscribe to our channel, and if you feel like we've delivered value, please share this video with one person. That's right, just one person as a token of your appreciation for the hard work we put into making content that educates and helps you on your mission of building your own fortune. Remember, you can watch video after video, But it isn't until you actually take action that you'll start to see results. See you soon!